Hello and welcome to this April 27th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring MoneyGram International, ticker symbol MGI. This is about a $273 million market cap services company. Taking a look at the chart, you can see that we've been in this nice uptrend here for about the last 4 months or so, and we've had several tests along the trend line. That's very important from our perspective because the more successful tests you have along a trend line, the better the trend line can be relied upon and the more meaningful it is if it were to break down. So we do want to kind of watch this trend line. Also, you can see that the 50-day moving average, which comes in at $3.22, Monday's low was down at $3.23. So just two and a half weeks ago, MGI was up around the $4 level. You can see on this false breakout, the MACD was starting to roll over, so we did have a false breakout with a slight negative divergence, and then we've seen some weakness all the way back now to the 50-day moving average. Notice also that the breakout that we saw in the latter part of March with confirming volume took out the prior high right around the $3.30 level, which is where we closed on Monday. So we've got the price support, which seems to be holding. We've got the trend line, which so far is holding, the 50-day moving average, which is holding. We were very overbought back early in April. You can see the RSI was up around 80. Stochastics were in the 90s. We've waited. We've actually now seen this sell-off and pullback to a point where MGI now is sitting with an RSI at 44 and stochastics at 8. Much better time to get into a stock on a pullback in an uptrend with the oscillators actually moving much more toward oversold than where they were in overbought territory just 2 or 3 weeks ago. So I think the chart looks pretty bullish here. Again, we're getting this near the support level, so if it does fail to hold on to support, your losses are going to be minimized. If you're chasing a stock like this back in late March, early April, and you happen to buy it near $3.80 or $3.90, even $4, you can see that this would be a painful move back down almost 20% from the high, back down to the low on Monday at $3.23. So we do like the entry point here, thinking that the risk reward looks a lot better. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.